Now, don't take my statement as saying this being a good thing as overall being a good thing. I know a lot of people have lost their jobs, a lot of people are out of work, and that cannot be just glossed over. What's up, interwebs? It's your realtor. I delayed doing the Tuesday market update because I knew May 1st was coming, and May 1st is going to give us an indication. We get all the numbers from April to kind of see what's going on. So I actually haven't looked at any of the numbers yet. So we're going to discover this together, and you kind of get to see my process of how I kind of go through the numbers and analyze kind of the data that's there. So let's get into it. So all of my data I'm getting from the MLS system. Here we go. Let's get into market summary and take a look. All right, let's check Maricopa County. Okay, we want to look at April 2020. We're just going to look at residential. Here we go. So one thing I have noticed without having looked at these numbers, I do know that inventory has been creeping its way back up. So from basically middle of March through about a week ago, inventory levels were continuing to increase. But then in the last week or so, I've seen active listings starting to decrease again. So I definitely think that the change in the dialogue that's happening, i.e. our leaders, governors, president, everybody is talking about how we open back up. So I think that's giving buyers a little bit more confidence that things are starting to turn around. But looking at the numbers right here, we can see a big old drop off. We really kind of expected it. But it wasn't an insane decline. Like, there was still quite a few homes sold. Let's check numbers against last year. So sold listings were down about 28%. Pending listings were down about 60%, which is all in line with what we're seeing. Because again, these numbers, especially like the sold listings, most of those that closed in April went under contract sometime in March. So I wouldn't expect a massive decline, which it's not. 28% is still pretty significant. The pending listings are down like 60%, and that's a little more indication of what was going on in April. Active listings, we're down about 16% in April. So my overall, like, my initial reaction to this is it's not as bad as I thought it was going to be. If I'm being clear, I was expecting something really, really dramatic, and it is dramatic. I mean, you guys can see here the active listings popped up because new listings and sold listings both went down, but they went down to like February kind of levels. So definitely we saw a decline for sure. Listing prices, the average sold came down a little bit. As we've talked before, that's not necessarily an indication of values going down, but it may be an indication of the situation, because I think some people that bought were able to get a little bit better deal than they might have otherwise, because there were so few buyers on the market and a lot of owners wanted to get rid of their property. So I think there was some more willingness to negotiate maybe a little bit lower price for a home. But as I said, all the numbers are ticking up again for activity. We are still at under 2 months of inventory. So even with everything that's happened, we're still in a seller's market. As I've said before, 3 months of inventory is what makes a balanced market. And we definitely are still under that threshold for Maricopa County as a whole. So see that 2 month mark, we're just under it. Last April, we were at 2.5 months. So we are actually in a stronger seller's market this April, even with everything going on, than we were in April of 2019. So Definitely it has dramatically affected the real estate market. In my opinion, for Arizona specifically, now, if you're in another state, another area, this may not apply, but because of how hot our market was, how dramatically we were swung toward a seller's market, this has kind of cooled things down a little bit, and it was starting to get overheated. The market was really, in Arizona, was really starting to get overheated. So I've actually seen this as a good thing for market stability overall. We were starting to see things kind of go crazy, go little gangbusters right before this happened, like 12, 13 offers on a house, stuff going for well over asking, people starting to waive appraisals, stuff like that. Like that's when you get into a super heated market, and questionable things start to happen in those kind of markets. So I've seen this as actually a pretty good thing for the housing market as a whole. Now, don't take my statement as saying this being a good thing as overall being a good thing. I know a lot of people have lost their jobs, a lot of people are out of work, and that cannot be just glossed over. But from a house value standpoint, from a house price standpoint, from a real estate market standpoint, I thought the market needed some brake pumping anyway. So I think that's what we've seen a little bit. That being said, I think once things really do open back up, I think we're going to get back into a similar point as that with people buying, because people need to buy houses, and some people feel like they're afraid of a market crash or something like that. And I'll talk about that in a minute. Even with everything that's going on, but we're already seeing numbers tick back up for buyers. I'm under contract on a place right now with a client, so it all looks like it's still heading in a positive direction from value standpoint. So let's quickly just bounce through a couple other areas that we focus on a lot in this show. So let's check out Chandler real quick. And so I don't know that I've ever seen this these graphs move around each other quite so much. So here's what was going on. Just to give you an idea of that. So if you guys look here and at the tan line, that's the new listings. In March, we actually had more new listings than we had active listings. So like that shows you how low our inventory was. This was that in 1 month we put more houses on the market than were currently active. So again, here what I expected, the active listings popped up because new listings and sold listings dropped pretty dramatically for Chandler. Absorption rate is still under a month and a half. So we're still in a strong seller's market. We have seen a drop off of the sold prices. We know this, that we see these blips sometimes. This is not necessarily indicating a dramatic drop trend. It also could be the spread of houses that sold. Let's see what the spread was for this one. Yeah, we had only one house over $1 million sell this year. We had 3, 4, 5, 6 houses over $1 million sell last year. So I think that's really definitely the section of the market that I think dried up a lot was the $1 million plus, the luxury market. And part of that's because a lot of those folks have their assets tied up in the stock market and things like that, and that did take a dive for sure. Number of houses sold down 150, again about kind of what we're expecting to see, but still not quite as dramatic as I was afraid might come about. Let's check Gilbert. I bet Gilbert's going to look very similar because it always looks similar. So Gilbert barely ticked down at all on sold listings. I wonder what's going on there. So, this is a great indication of that superheated market we're getting, right? So if you just take a trend line for sold price here, where we're at right now is perfectly in line with kind of that trend. We had 2 super hot months in February and March, and that is showing that indication of that kind of like overheated market where things were kind of going a little bit, in my opinion, crazy. Absorption rate still is under 1.4. Days on market are right at 30. Most escrows before this were taking about 30 days. Now we're seeing escrows more like 40 days. I think lenders are taking a little bit closer look at applications and stuff like that, so that's taking a little bit longer. Gilbert had a few over $1 million, but only 3 over $1 million. Last year they had 5 over $1 million. So Gilbert seemed to weather this a little bit better than some of the other places. Let's check Scottsdale. Nope, let's check Paradise Valley. Because Paradise Valley is almost exclusively luxury homes. They do have a couple pockets of townhouses, but they are almost exclusively luxury. And that data is incorrect. Oh, I punched in Paradise, not Paradise Valley. I wonder where Paradise, Arizona is. That might be a fun place to check out. All right, here we go. Definitely tick down a bit. The volume of houses in here are just a lot lower than everywhere else. We sold, what, 50 maybe? 33 homes, down from 47. Yeah, you got a little, definitely, so the 3 million plus was down more than half. 2 million to 3 million was down almost half. So yeah, definitely drop off there. I was expecting a little bit steeper of a decline. And also, as you can see here, you've got a spike up, but that's because what did close were super, super expensive. Like we had 6 that sold over 3 million. So we probably had a couple that were like super high. I'll actually check that here in a second. Actually, let's check this now. Let's check this right now. Let's go to quick search. Again, this is what I do before. Usually I do all this before I do the show so that I have the information. I can just spit it off real quick. And I wanted to share with you kind of my facial, because I tend to do a lot of facial reactions for stuff. So I wanted to kind of give you guys an idea of my initial responses for what I'm seeing. So these are all the 36 houses we saw on the other screen. I'm gonna go list, and we're gonna take a look here and see, like I said, there are a couple of townhouse areas. Even that's a townhouse at $500,000. But then you get into, yeah, so mostly luxury homes. Anyway, price descending. Ooh-wee. So a $17.5 million house and a $9.5 million house. Those are why we saw that big spike in the sold price. You throw 2 things like that into the mix, and it's going to automatically bump that average up. So this is what I do when I see a large spike or a large drop. I'm going to go in and look a little deeper into what was going on that caused that. So in this case, $17.5 million house. Let's look at the pictures. Well, that's nice. Oh, there's only one picture. Sad. Does it have pictures? Ooh, it's got 9 pictures. Let's take a look at those. Very modern. Super cool. But definitely very modern. Ooh, that is a nice theater room. I like that theater room. Oh my gosh. Love the seats down front, seats in the middle, and then a little bar back here. That's a nice theater room. If you don't know, I used to have a home theater company, and so that kind of stuff always excites me a little bit. So, yeah. Nice place. Nice views. Nice mountain views. Ooh, nice balcony up on the roof. That's pretty cool. But yeah, very, very modern home there. So, Oh, I was gonna mention people that are still hoping / expecting / worried about a housing market crash. There have been people that have been getting like forbearance with their lender to like skip a mortgage payment because they can't make it or stuff like that. There are some situations with lenders where they are expecting that money. They're not like just adding it on to the end of the term. What they're doing is they're actually asking for it to be paid like in 6 months. Every lender's different, so make sure if you did do that program, the forbearance, the loan forbearance, make sure you check with your lender and find out the exact details. If you haven't done it yet and you're considering it, make sure you look into all the details of that forbearance program, because you might get stuck with a balloon payment or something like that a few months down the road. There are people that are concerned that that is going to cause a bunch of foreclosures, and that's just probably not going to happen, because there is so much equity in homes in Arizona right now that unless you only bought like a year ago, and even if you bought a year ago, you probably still have decent equity in your house, you can sell a house. So it ends up being like a short sale situation, because you're not able to make your payments or something like that's happened, but you can sell your house to repay that debt. And so it's not like you're upside down and you can't repay the debt by selling your house. That's a foreclosure. So I think if anything comes from the loan forbearance stuff and people start to default on their mortgages, we're gonna see some short sales come on. I don't believe we're gonna see like a lot of full on foreclosures in Arizona. Again, I have to keep prefacing, in Arizona. There are other markets that were already seeing a little bit of a downturn before this happened. There are just so many people moving to the valley, and we have such a robust economy, we're not seeing that. Anyway, I hope you guys enjoyed kind of seeing my process of how I kind of analyze the market and my reactions to numbers I didn't see. I didn't look at any of it before I recorded this video. So I hope you find that helpful. And if you guys ever have a question about what's going on or what I'm seeing in the market, give me a shout out, give me a call, text, message, whatever, and I will give you data to back up, not just anecdotal, I feel like this is happening. So I'll see you guys next week on the Tuesday Market Update. Bye guys.